hell's going on. There we go. I don't know what the hell's going on with this damn thing. God, this annoys. So yes, I decided I am going next week. We're going to have a new options, title and description. I can't do. Let's see. Do a thumbnail. I thought we can do a thumbnail. Yeah. Load thumbnail. Do this. Do live recordings. Save. Back. Monetize it. Morning, Victor. What up, Tora? Wow. I gotta get all my crap together. I hope I sound decent. I hope I'm not am I overmodulating? A little bit. Hold on. I'm gonna turn this down a little bit. There we go. Okay. That seems to be a little bit better. Okay, there we go. That seems to be a little bit better. Yeah, there we go. I'm not crazy loud. A little bit loud, not crazy loud. It's a little. Sign out. God, this is annoying. So there's a whole setup process. This product. I think the summer flash sale is over. And we'll open up Seeking Alpha Premium. Then we'll Alpha Picks. Should be in. Morning, Travis. What a freaking nightmare. So OBS sucks. OBS has just been. I went through last night somewhere in the neighborhood of 4 hours. I'm gonna log in. Morning, Star. Morning, Travis. 4 hours of trying to get this damn thing working. And just still, it didn't do great. So we're going to do scans. Oh. See, morning, Sir Ryan. I want to see. So, sure, yeah, you can see all that. So I want to. Let me just make sure I can do this. Okay. First bull 821 EMA cross since May. Okay. Yeah, there you go. What up, Steph? Wow. Love the and I don't even know if you guys are boomers or if you're, younger. But I don't think there ever could be a viral moment like what's up in today's society other than Haktua. But even that wasn't a viral moment where you called your friends and then just went or left a message, because you don't call or leave a message these days. But you call and left a message and you B, and then hung up the phone. That's all you did. That's all you did. It was a good day to be alive. Good time to be alive. And you have a bunch of stuff to. Nothing in the core portfolio. Brokerage holdings, nothing in there. I know, Chris, you're old enough to remember. Where's the beef? Yeah. See? PANW was a no-brainer. PANW in my, and PANW wasn't, Steph, PANW wasn't just a yesterday play. PANW has been a play for quite a while. And again, I own a lot of PANW. Let's go back to the 4-hour because I own a ton of this. I own, it's mid-5, maybe close to 6 figures. I'm not quite sure because I just kind of bought it and forgot it. Now, it wasn't great this earnings. In February, it wasn't great, but I've said that was a buying opportunity. You got your gap up here to 365. You're going to cover it. It covered it last night. If you look at the 5-minute after hours, let's just look at the after hours 5-minute. It got to, let's do 362. 362 it got to. So, yeah. 345. No, it got over that hump. So I think that's the new kind of resistance, 367, 366. But long term, it's in my retirement account. And it's one of those that I just forget about. Let me see. I'll tell you, my initial buy on PANW. I'll tell you the dates. But, again, don't follow me. The goal is to have you guys do this on your own. I bought 222, 22. 222, 22. And then I added here in February of 24. So just 2 lots. 2 lots, that's it. Average purchase price right now is 170. So quite a good gain. Now, you take a look at that 222.22. Let's go back to 22 right here. I mean, that was, 171. So didn't add it down here. Didn't add on any of these pullbacks. Should have, but I didn't. So yeah, and that's the thing is, you've got your winners, and this is just one. In my mind, cybersecurity, I think you just hold on to it. Now the mid fig. Let's see, how much do I have? Yeah, the initial buy $30,000, so you can figure it out from there. So I'm gonna turn on Do Not and get back to scans. So, I do think last night it was interesting because I think CrowdStrike became a good play last night because we heard the platforming was working. What we didn't hear was, oh my God, we got a ton of new customers. We did hear on Jim Cramer from the CEO that they did have a good time signing up new people, but it wasn't like, oh my God, CrowdStrike sucks. We got all of their customers and blah, blah, blah. I think CrowdStrike, you got a nice kind of boom. I think you're back to 300 on CrowdStrike, but just be aware that 50-day has not turned positive yet. So, I haven't gone all in. I bought a couple of lots of CrowdStrike. CrowdStrike, I've got significantly less CrowdStrike, but that's because I'm down 11% total on this one because I was adding during this time. This time was where I was adding. Remember, I think it was this earnings where it popped up. Might have been this earnings. No, I think it was January. I just started adding to that. Let me see. Yes, that was March, July, and August, right here. August, right here. 230. So I bought here. I didn't buy here at 201. I didn't buy there. Let me see if I get an ad when I'm live now. Because I'm not getting paid from freaking YouTube. I found that out. That. No, and I get an ad. I don't know why. But I think last night we heard just, hey, cybersecurity, you need it. If you don't have it, you're going to get screwed. So you better get on it. Nothing in Bitcoin. Let's see. I did have a good chat. By the way, starting next week, I think. I will be wearing Trendspider gear. They're pimping me out. So SCO and KOLD. I'll take a look at ASPN. F's. What is Meta? Meta bear. Meta bear. I think you have another chance to get it under 500. Again, I'm kind of, low cost. You know what I want to do? I want to. Oh, a second. Abilities. LU. Spider. Let's watch list. Did nothing cross up on the watch list? That'll be first. Yeah, HIMS is one that I don't know that I'd be super like. And Powell. So Ryan, I own PANW and CrowdStrike. I mean, I think I've gone over them enough in the past. Earnings are done. You can read the earnings or listen to the calls on Earnings Hub. I don't know what you want me to go over. I mean, the charts are the charts, but KHC, CSX. I can't go over the same stocks every day. That gets boring, and it doesn't teach you how to fish. It makes you reliant on me. And that's not what I want. While I'd love you guys to listen every single day, I'd rather have you do your own work. I know Chris is here, just to kind of have the community. I like HIMS. The problem I have with HIMS, and it wasn't the CEO speaking out. I even said that. I said the CEO speaking out. I said that dude just needs, CEO training 101. But the problem I had with HIMS right now is that they're using a compound pharmacy formula. And I think that could get them in trouble. And so I think your risk is really to the side of, hey, they could get sued. which could bring you back tremendously. Now, here's the thing. The 4-hour algorithm on this, Steph, it makes you 191% over 24 months versus 128% buy and hold. That shows me, besides the two, take your pick, Sir Ryan. I mean, go here's what I want you to do. Here's my thought for you. Go and research them and tell me which one you pick and why. That's what I'd rather have you do. You've been here enough. You know what I'm going to use. I'm going to use FinViz. I'm going to go to Seeking Alpha. I'm going to go to the chart. I don't know your time frame. I don't know your portfolio. I don't know your investment thesis. I don't know that. But you tell me which one you would pick and why. And be specific. The fundamental reason, is it a technical reason? Is it short term or is it long term? I'm putting that on you. So by the end of this, I want a nice little paragraph in the comments about which one you would pick. That's what I want. Oh, and I don't know any other companies. I mean, I know my dad has Fortinet. I know Zscaler. I know other stuff. My dad has quite a bit of Fortinet, and I think I've gone over Fortinet before. But you can use the peers section in Seeking Alpha to go and look. I got out of half of my dad's position in Fortinet at $70. It has since gone to 74, which again is like 4 or 5%, maybe 6%. I can't do math in my head, but that's a good move, and I've given that up. But I do think that we've seen quite a bit of candles over that, but it hasn't gotten above that for very long. And so when you get above that 70 level, you kind of sit there for a little while and then you pull back. The MACD is not high enough to pull back. The RSI is high enough to pull back. So I got rid of half of his position. We're going to move that into, I think we moved it into CrowdStrike. I don't think he owns PANW. So, okay, let's open up. Let me, what was the one that I was going to go over? PANW. Aspen, ASPN. Aerogels. Chart looks great. Algorithm that makes you 68%. Buying and holding makes you 127%. See. $0.4 billion company, small cap. Valuation F. They're not making money. Trade. I mean, asking me about a materials, a chemicals company, is like going to McDonald's and saying, "Hey, what do you think of the Whopper?" That's, understand who you're asking and what your investment thesis is. You can trade it. Trade it on the 4-hour. 4-hour makes you 68%. Buying and holding makes you 127%. If you're big on the company, just hold it. It makes you 127%. But if you're not big on the company because they're not making money, then trade it. I mean, it really is as simple as that. I don't think there's a lot more to it than that kind of stuff. So ASPN, it's not my cup of tea. I'm not putting money into it, but just like HIMS, I've lost money. The opportunity was there for me to make money. So I do think that there's a certain amount of the core portfolio here are good companies with good management, with good profits and good products. It's as simple as that. Aerogels, I have no idea what they do. So, let's open up some of these, and I will use that, by the way, McDonald's and Burger King reference in the. I want to, what? How can I do? You know what? We're gonna post these. No, I'm not. No, I'm not even. I'm going to post them in the newsletter. I will post them in. Yeah, there's a list of ETFs, index ETF investing. And I'm going to put that in. There's also a text from Personal Finance that I'm going. Well, it's a great list of stocks. S&P buy and sell ideas for each sector by Oppenheimer. Max N. If you want volatility and you want to trade, go Max N. This one was up 46% yesterday. Pre-market, it's up 11%. It is going bankrupt, but it is. Monkeypox. I'm not allowed to call it monkeypox because I will get canceled. Oh, Motley Fool says buy. You know what? Let's go to fool.com. Let's sign into fool.com. If I can figure out where to sign in, because this always confuses the hell out of me. About us, our services, stock market news. Start now. And in page. Price Fool, there we go. They just posted a Lululemon. Dad sent me that. Yeah. There we go. They said bye, Lulu. We're going to go to Lily. We're going to go to Twitter to show Steve Grasso and what you've been, what I've been talking about. He posts, hey, I'm taking profits, and then it's likely to go down tomorrow. Where are we on NVIDIA? You're going to end the day up probably. And that's kind of, you know, this was interesting because Bitcoin miners, I saw this thesis yesterday on CNBC, and I'll post this, the video that I saw. Dude has some type of like birthmark or something. I don't know if he got hit in the face. That's what it looks like, is that he got hit in the face. Video hit 130s. Okay, that's all the links that I have. So the rest is going to be charts. It's going to be chart heavy today. Yeah. Okay. Let me see if I missed anything. Josh, hopefully that got you your thing about Aspen aerosols. I'm just not a. I mean, I've heard the dudes on Twitter talk about it. I think it's a hype play, but I do think that it's got some value to it. I just don't know what. So SoFi's a great trade. Yeah, I agree. You know, SoFi, I think it's a $10 stock at some point in time. But until then, it is like Chris says, rinse and repeat. It has shown that $7 is that. I mean, you know, let's put in a $7 line here. $7 right there. Okay, $7. Look, I mean, that's just since January 1st. And you got below there once. Got to sell it up there. Got there below there twice. Got to sell it up there. Got below there 3 times. Got to sell it up there. Got below there 4 times. Got to sell it up there. Got below there 5 times. You got to sell it up there. So, and Josh, I don't mean to be, you know, my apologies if I sound like an old dude who says, get off my lawn, kids, and, you know, go grab your ball and go play somewhere else. I don't mean to be. It's just, it's a matter of, you know, asking somebody, and remember, the point of this particular channel is not to grift you. It's not to flex. I'm not throwing up my 6 Lamborghinis that I have. I'm not flashing cash on the screen. But the goal of the channel is to teach you how to fish. And so coming on and asking kind of, hey, what do you think about this one? You have the same tools as I do. Maybe you don't have Trendspider. Maybe you don't have Seeking Alpha. Maybe you don't, there were many years where I didn't. And asking somebody on the internet is great to kind of guide you and show you exactly where to go and what to do. But when it comes down to it, it's your money. And so I'm not pressing the buy button. You are. And so when somebody tells you to buy, that's the problem. I mean, look at Melly. Jesus, they're selling $188 million worth of Melly. You don't think that's going to bring it down. And that's kind of there's nothing. Jim Cramer actually said some really good stuff last night. He had a great show last night. And I don't say that often, but he had a great show last night. And he said single stocks are the greatest vehicle to wealth creation in this company. And so you've got to have exposure to them. And I agree with that. And I'm going to kind of balance that out with the fact that I'm in a high net worth group, of high net worth individuals who have 3 million or more, and you have to justify it in order to get in the group. And it's very private, so I don't necessarily like to talk about it or promote it. But there's a guy, Ramit Sethi, who hosts on Netflix, I Will Teach You to Be Rich. It's from his book. And he has a podcast too. We debate a lot in that group about this because I'd say a good 70% of those high net worth group individuals are buy and hold VTI, VOO, VXUS, VT. So I'll go over it. I'm gonna post it in the newsletter about it. But I do think that when it comes down to it, you just have to find your own comfort level and where you're at. And if Aspen Aerosols is kind of that comfort level, and you want to throw it in there, have at it. If not, I would say open up a Webull account and throw in Aspen. If it's one of those plays that you want, go on Linktree and open up a Webull account. That's what I did. You can get to Webull on my Linktree. Just throw $1,000 in there. That's what I did. Join Webull and get free stocks. Use the link so that you do get free stocks. But I think that's where you want to go. So. Okay. Start recording. I hope this works. I hope this doesn't crash. Good morning. It is Tuesday, August 20th. I am so frustrated with OBS, my live. If the video doesn't match, if my voice doesn't match, I know it was glitchy yesterday. Hopefully it's a little bit better today. I reinstalled everything. I spent 4 hours last night reinstalling everything. So the crap I do, sorry, I almost said the S word, but the crap I do for this show, it's good. I did chat with the CEO of Trendspider last night, a little bit yesterday. I will be decked out in Trendspider gear. They want it, they're huge. They're my main tool. I'm an affiliate with them. I love those guys. Dan is sending me some stuff. What he did say, and I said this to him, I said, hey, Dan, I hope, this top tier that I'm promoting for you guys, it's this advanced tier because it comes with unlimited one-on-one training. I don't know where you're getting unlimited one-on-one training from a technical tool. Like, you can always get training from some douche on the internet who's going to teach you how to do it. But these are from the people who built this tool. And so it's free, unlimited. And I said, hey, Dan, do you mind me promoting the fact that you guys do this? He said, no. He said, we love training people on how to use our tool. That's why we're here. They have experts that do one-on-one training with you. I'm not an expert on the tool. I'm just somebody who learned to use the tool to my benefit. I constantly use in the bottom right-hand corner, you'll see a contact us button. And that is 100% what I use when I have a question. And I am not treated any differently than you are. The reason why I'm an affiliate of theirs is because their customer service is top notch. And Dan wants you to use this tool. He's willing to do the unlimited one-on-one training for that top tier. So what do? You use my link tree, sign up and get it. If you want to wait for a sale, wait for a sale. If you just want to start making some money, get the standard. When the advanced goes on sale, just text them and say, hey, I want to upgrade to this advanced tier. Can I upgrade? You can ask me to facilitate that if you'd like. But again, I'm not an expert on this. I am just a guy who has learned to use this tool just like you could be. I give you a head start with my 4-hour algorithm. I give you a head start with the 65-minute. I give you a head start with all of the watch lists and the scanners. I give you a head start. So now let's talk about the markets. What have I seen in the last 8 days? Let's go for an hourly, okay? We're going to go to a 1-hour chart. And I want to show you each day because it's important to see, let's go to 65-minute because there's 7 candles in each one. Okay, so we're going to start with the bottom here, August 5th. This was the bottom, and you saw it start to kind of come down in the afternoon. Okay, then what did we do the next day? Well, we had a big morning, and then the next day, we started to come down. And then August 8th, we went up throughout the day. August 9th, we went up throughout the day. And then August 12th, that is Monday. That was last Monday, and we saw that yen trade, and it came down, or this might have been the week after the yen trade, but it came down. And then the next day, we gapped up, and you saw it sell into the afternoon. And then the next day, we saw it go up. And then for the last few days, the 15th, the 16th, and the 17th, or I'm sorry, the 19th and the 20th, we saw kind of afternoon, morning selling. And then it was kind of, common. And then the afternoon, it picked up. Buyers are showing up in the afternoon. I like it. I like the way this market's playing out. I'm getting more confident. I'm still being patient. I've still added more NVIDIA. We'll go over NVIDIA because a trader actually sold it yesterday who bought under 100 and said, hey, I'm going to have a chance to buy it again back at 100. I don't know. He's saying today it's going to pull back. We'll go over a couple of alpha picks that Kramer had on last night. He had a great show last night. I will build you an 821 crossover in Trendspider, okay? This on SPY has a tremendous win rate. We'll go over how the Bitcoin miners, how they have an opportunity with power to actually do. If you had Seeking Alpha, you saw this article on Saturday. It just became news yesterday, and they all shot up. NVIDIA, we'll talk about those. Lilly, had their new diabetes drug. Motley Fool says Lulu is a buy. We'll go over that. I'm not a pharma guy, but monkeypox, and I'm not allowed to call it monkeypox anymore. It's got to be Mpox or else I'll get canceled, but we'll go over that. A couple of stocks for trade volatility and a great list of stocks, plus Palo Alto Networks earnings. So let's go over what Kramer had on last night because he had 2 alpha picks. If you don't know what alpha picks are, Alpha Picks is a custom-built portfolio from Seeking Alpha. It's the 3rd link here on Linktree. So if you want to go to research it, use the 3rd link because you get a discount on it. Alpha Picks is there, and I'm an affiliate, not because, hey, it's a great tool. It's a great thing to get texted alerts when to buy and when to sell. It's because of their portfolio performance. And so a lot of people who are brand new to fundamentals, again, remember, Trendspider is technicals, Seeking Alpha is fundamentals. The difference is technicals has charts. Fundamentals don't deal with charts. It just deals with actual earnings and numbers. So fundamentals is what Alpha Picks is. This is their portfolio. They text you on the 1st and the 15th of each month. They also text you throughout the month when to sell. Okay, they don't have a ton of sales. It's a buy and hold strategy, but it's just those 2. The performance since July 1st, 2022, we went over the yearly performance yesterday. It was up 32% versus the S&P year to date, up to like 16%, somewhere in that neighborhood. You can look at it. But again, it's 114%. Okay, he had 2 of the alpha picks on yesterday. He had Cardinal Health. He had the CEO on yesterday. I thought this was an interesting one because it has been in an upward trajectory and their earnings were really, really good. So the 4-hour algorithm on this one got you in at 95, and that was in the middle of July, and you're at 109 right now. Again, I based on the performance of this, I'd probably feel a little bit healthier doing the 4-hour algorithm than I would the actual buying and holding. Even though Alpha Picks is buy and hold, but you can get Seeking Alpha Premium and just do kind of your own research. And let's look at our own research. It's a quant of a hold, and the reason is the growth. And they brought up the growth last night. I don't think Kramer pressed them enough, but they did grow. The last 2 earnings have been really good. And part of the point that Kramer made, which I thought was really good, they've had 2 very good quarters. This earnings, the street beat them down from 100 to about 95. And then they came back up and they went right back down. That's a typical, double top kind of here where it just broke out. You had your point right here and then it kind of double topped right there. And it broke out. So we have confirmation on this, but Kramer brought up, hey, this was 2 really good quarters. And as of yesterday, you could buy this for the same price before 2 really strong quarters. And this quarter was really strong as well. And the CEO said, hey, we're going to grow. And so that's the biggest ding on this one. I think it's a good play. I sold my dad. My dad had like $1,000 of this sitting out there that he had like 100% win on or something. It was a very small amount. I sold out of it. Might get back in. When the algorithm tells me to, I might get back in. This is on the watch list. Now, the other one that he had that is on the watch list is POWL. And he went over this. It's trading, again, kind of to point this out. They had 2 phenomenal quarters. Okay? And you're getting to buy it at the price where it was just after that last quarter. It hasn't moved. Now, the cap on this one is 200. So let's do a little bit of work on this one to see where this is. The weekly chart, you still have confirmation. Your Bollinger Bands, they're kind of cinching up a little bit. Now, they cinched up here clearly in December to move from 83 up to 171. This one got all the way up to 209. Okay? This chart looks good. The MACD has reset itself. The MACD is crossing up on the strike line. The RSI's at 59. Again, it hasn't been here for a very long time. Look at the volume in this, okay? It's just getting discovered. So POWL, let's look at some of the fundamentals. And again, this is an alpha pick. So it's a stock that I would know nothing about other than alpha picks. The quant has it as a strong buy. Okay, Amrita Roy, beware of the high short float. It's time to take profits. Short interest is 14%. People are expecting this to come down. Wall Street says it's a hold. What's Wall Street's price target? Wall Street's price target is 181. That's only 5% up. When you look at the summary and you look at the 52-week range, it's 72 to 209. So it has beaten that price before. If we go and we look, there's only one analyst that covers this. That's why it's a hold. That's why it's 181. There's only one analyst that covers this. One. And so I would argue the quant is what you want to base this on. Now, when we look at the quant, it's been a strong buy since 159. It was a strong buy back here at 86. It's been a hold a couple of times when it was pulling back, but right now it's still a strong buy. When you look at the valuation of this, okay? The sector's trading at a 19 PE. This one's trading at a 16. When you look at the PEG ratio, okay, that includes the growth. The sector's trading at a 1.77. This one's at a 1.29. When you look at the growth of this company, revenue year over year, 44% growth. It's going to be hard to do that, but it's 44% growth. Sector, 4%. This is an industrial, okay? Levered free cash flow year over year, 36%. The sector's growing at 15%. So let's go and look. Let's say, well, maybe they're cutting prices. Well, they're not. Their gross profit margin, 25%. The sector's at 31%. That's still really good because look at the EBITDA margin. Okay. Net income margin, 13%. The sector's at 6%. And their momentum, good Lord. The 3 month, they're up 8%. The sector's down 1%. 6 month, they're up 11%. The sector's up 2%. 9 months, they're up 101%. 1 year, they're up 116%. Is it too late to get in on this one? I don't think so. Again, I think this one, if you can get it in the 150s, get it in the 150s. Trade it on the 4-hour algorithm, because the 4-hour algorithm over 24 months makes you 527%. Okay. Buying and holding makes you 531. That 4%, it's worth just trading on the 4-hour algorithm. It has you in right now. It has confirmation. They just had good earnings. You passed your ex-dividend date. I think this is one that you could do. Now, another one that is that I looked at last night that I wanted to check on, Steel Dynamics. This is in the watch list as well. Let me just make sure it's in the watch list. No, I don't have it in the watch list. It might be something else. But Steel Dynamics was one that I looked up last night because I said, where is steel? Because the Chinese, they're dumping a bunch of steel. This is one, and the other one in steel is NUE, Nucor. They're both down because China's dumping a ton of cheap steel on the market. And so that's where this pullback has come in. I don't think it's done going down, but I want to keep an eye on this one. That's what 2 names that I put into my my industrials list. Again, have some lists available to yourself. When you read something, when you hear something, have these lists available, because when they become buys, you can take a look at that list and see if you want to put some capital towards it. Now, NVIDIA. Let's talk about NVIDIA. NVIDIA hit 130 yesterday. Okay, it's at 128. It's down 1% today. This has been on a run. Algorithm got you in at 105. It was timed almost perfectly. We hit it. This was the Monday, August 5th. It went all the way down to 101. You got below 100 here. It was at, let's see, the low here is $90. $90 was the absolute low on August 5th. Now, if you got in there, you're up huge on that one. 105, the algorithm got you in. It plays in that middle ground. The MACD, a little bit stretched. When we take a look at the weekly, and this is what I want to point out, is that the last couple of times we've gone under the 9-day and the 21-day. That's the yellow line and the green line there, okay? The last 2 times we got there, we took a break and then we moved higher. Now, is this one that can go higher? Well, let's go take a look at the fundamentals, okay? Because this one has earnings coming up next week. When you take a look at this, Wall Street says it's a strong buy. I guarantee you there's more than one analyst covering this, but the quant says it's a hold. Why does it say it's a hold? Well, it's the valuation. So let's go in and look. The PE 72, the sector's at 23. Now the PEG go forward ratio is 1.3. The sector's at 1.9. Your PEG ratio is 0.09. Again, anything under a 1 is like unbelievable. This thing has been blowing away earnings by like $10 billion per quarter, not even per year, per quarter. And so, the valuation to me doesn't, Meta, Amazon, Google, they all got dinged for spending too much money. Where's that money going? It's going to NVIDIA. We know they're going to blow away earnings. It's just by about how much. And if the market feels like it's still got legs, then we're going to see it go up. Now, there's 59 analysts that cover this on Wall Street. 59. Their average price target is 140. It hit 130 yesterday. Any chance you get to buy this on a fallback, you buy it and you hold it. People always ask me, are you buying this for the long term? Yes. The answer is yes. What's my long term? Over a year. What's your long term? It's different for you. But am I buying this one? Absolutely. And I just went over the reasons. The growth in this one is phenomenal. The top, one of the top market cap companies in the world is growing at 208% revenue year over year, EBITDA growth of 709%. Now that could go down. It most likely will go down. It can't be sustained. But the billions of dollars they're spending right now, I think this one is a good one. Another good one that I've pointed out that might be a little bit stretched right now, but I don't think it's a bad one, is Netflix. This one shot up yesterday. This one, the algorithm got you in at 620. Okay, 620. You still have confirmation. Your top here is 700. It's one of the great 8 that still hasn't hit its all-time high. And its all-time high was back here in 2021. It still hasn't hit that. It never got to 700. It got to 697 right here. And it pulled back. So if you buy at 688, 700 is your cap. Do you want to buy it? Right now, I would say no. But as it pulls back, yes. If it were me and I didn't have a position in this, once it gets over 700 and it sustains that, 700 is your support level. And so I would argue this one is a little bit stretched. We just looked at NVIDIA, how great that one looked from a valuation standpoint. Look, this one's growing at 13%, but the sector's only growing at 1%. Okay? The growth, the EBITDA growth, they're growing at 50% EBITDA. EBITDA. If you don't know what EBITDA is, go to investing.com and look up the definition. The valuation is a little bit stretched. Their growth supports it. Their PE is 43. Their PEG, same as NVIDIA, 1.31, but their sector's PEG is 1.4. So this is communication services. It's one of the best stocks of the year. Again, you can take a look at this over 1 year. It's up 68%. But that's how you look at these stocks, and you look at them and you compare them and you try and decide where you want to put your money. Now, I'm going to include this graphic in the newsletter. If you're not signed up for the newsletter, you can go over to the link tree, and it's the 5th link down here. And it's free. It's free during the week. dailystockpick.substack.com. During the weekend, I do post paid newsletters, but it's 100% free. I will post this in the newsletter. Trendspider posted last night on their Instagram. SPY. It had its first 821 cross up. Okay? We can look at 821 cross up. Its first bull run since May. If you used a bull cross up, which means the 8-day crosses up on the 21, I'm not going to create those lines on my chart. I don't use those lines. But you can still write a strategy for it. And I wrote this strategy, 821. Let's see. There it is. It's a daily stock pick algo 821. This is just a daily 821, and it gets out on the 821. I wrote this with ChatGPT in the service. So we just had an entry at 554. You can see this. What are the results? Well, over 4 years, you make 38%. They went back as long as, if you use a bull cross and a bear, over the last decade, they went back 10 years. Over 4 years, though, you make 38% versus 59% buy and hold. I would argue the S&P is something that you want to buy and hold. But your wins are 59%. If you don't think it's worth actually getting into SPY right now on an 821 crossover, you're saying, you know what? I don't mind losing 40% of the time. I'd rather, if you can find a game where you can win 60% of the time, good Lord, take it. Take it. But again, that 821, you can build it in Trendspider with ChatGPT. It is such a great tool. So let's go back to the 4 hour. Where's SPY on the 4 hour? It got you in earlier. It got you in at 534. Now, over 2 years, this one makes 35% versus 32% over 2 years. So again, your timeline matters. But I would argue that better than the 821 is my 4 hour algorithm. And you get the 4 hour algorithm when you sign up for Trendspider through me. So again, I'm just pointing that out. One thing that I saw yesterday is this video. And the dude has some type of birthmark or something. I don't know if he got punched in the face, but it was kind of distracting during the interview. You can watch this. It's a great interview. The guy is really, really good. He's the Van Ex head of digital assets research. He talks about Bitcoin. He talks about crypto. He talks about all that stuff. I will include his link right here. All of this, Bitcoin miners, AI arbitrage play to boost revenue. They are playing the power game. So what do these hyperscalers need? They need power to run their AI. What do Bitcoin miners have? They have power. Bitcoin miners have they have a 10-year track record of taking cheap power and turning it into money through Bitcoin. What does this AI want to do? They want to take cheap power and turn it into money by monetizing AI. It's a synergy. And that's what this guy's saying is the Bitcoin miners have an opportunity. Now, if you had Trendspider, you saw this on Saturday. Okay? They had this in there. And this is from his letter. Of automated trading platform Galileo FX. Following the halving event, block rewards were slashed by 50%, and they're saying that's a little hard. Now they're going in full bore. HUT, any, DGHI, cores. You can get the entire list right here. Sign up for my newsletter. It's in there, and it's free. It's free. So I want to point out this when it comes to NVIDIA. Steve Grasso, brilliant move. Got it under 100. He just sold 50. He basically said it grew so much in his portfolio because he went in so big that he bought in at $100. Nice streak. He'll take a look at it tomorrow and see if he wants to trade out of the entire position. And then he posted this. Okay, the next tweet. Strong chance NVIDIA is down tomorrow and gives some of its outside move back over the next few days. Now, we just went over NVIDIA. I said any pullback that you see, take the chance to buy it. I want to show you something because the 4-hour algorithm makes you 604%. What do you get over the last 2 years if you just bought and held NVIDIA? 604%. I would argue the algorithm doesn't protects you against the downside because you're making the same. You win 63% of the time. The algorithm doesn't have you out. You have confirmation over that 9-day. I would argue he's out too soon. But again, this is just a guess on the internet. Most of these guys are just doing hypothetical guesses. They're managing their own portfolio, and then they're putting it out there and talking their own book. He will fully admit when he's wrong. And I like Steve Grasso. He's really good. I just think he's wrong here. I don't think you want to trade in and out of this type of position. Again, I think the 4-hour algorithm, it takes emotion out of the trade. He's got emotion. He says, hey, SPY is up so much, I'm going to get out here. Well, I don't think that's not what you want to do. And so I would argue, don't follow a douche on the internet. Make sure that you're making your own decisions. Eli Lilly, terzepatide. I don't know how to say it. Again, I am not a pharma guy. I do know that Eli Lilly with Mounjaro and Zepbound, their diabetes and weight loss drug, cut the risk of developing type 2 diabetes by 94%. 94%. The people with the placebo, experienced whatever. Placebo compared to 2.1% for placebo. 94%. This is going to get approved when you stub your toe. And that's it. And they're going to make a fortune off of this, not to mention their Alzheimer drug, which nobody else is talking about. Now, Eli Lilly has run tremendously. I was banging the table. Get this under $900. I was saying $700 is a gift. $800 is a gift. It's now at $930. Do you want to buy this? I would argue that you want to wait on this. And this is one that, yes, I have waited on. The MACD is just too high. The RSI is just too high. The valuation on Eli Lilly is just a little too rich for my liking. It's a drug company. It's not in my wheelhouse. This is a drug company acting like a tech stock. Okay? That's where I'm a little bit concerned on this. The valuation is crazy. I do know the valuation makes no sense whatsoever because their growth is going to cover it. That 1.36 for a pharma company, crazy. They're going to get approvals for this. But what if they can't sell the drug for the high prices that they're charging? What if? That's the issue that you have with Eli Lilly. So while the valuation doesn't make sense to me and I'm a little bit scared, do I think you should get into this? Anything under $900, get in. Get in and just sit there. Just sit there. Now, Got an email from my dad last night, who's a Motley Fool subscriber. Buy Lululemon. They're executing on growth strategy. Remember, their chief product officer just left. Dark clouds will pass. Why buy Lululemon? They go over everything here. I'll post whatever I think is important here. I don't necessarily like Motley Fool. I don't like Lululemon. What could go wrong? Turn away from athleisure. I am an athleisure dude, but I buy the knockoffs off of Amazon, and China. Temu, they have Lulu knockoffs as well. So let's take a look at the stock, because this one is beaten down. This was a super high flyer, and it's just beaten down. I would argue, don't catch a falling knife. Some of the hedge funds have put money into this, but I guarantee you it is not their main position. Again, size matters. Ask any woman. Size matters. It does. Make sure that you're putting your money in your growers. Right now, this isn't a grower. This is a weed that you're probably going to water. If you're sitting there and you bought this at $491 or you bought this at $400 and you didn't get out, I said it was a steal under $400, but you needed to buy it with confirmation. You don't have confirmation. You haven't even gotten a death cross yet. Okay? I'd rather see you buy this at $300 than $259 and see it go down to $216. You want to wait until you have confirmation. Yes, the MACD is super low. Yes, you could trade it on tighter time frames, but I'd argue that it's not done going down. We can take a look at some of the fundamentals here in Seeking Alpha. Lululemon, the symbol is LULU. Quant says hold. The valuation is still stretched. It's still stretched. Yes, they're making a ton of money, but their PE is still 19. The sector's at 14. Their PEG, the forward PEG, 1.7. The sector's at 1.4. When you look at their growth, it's even worse. The forward long-term CAGR, it's a C. Return on growth, they're losing 7%. Yes, they're growing their revenue, but it's costing them a ton of money. And so that's the problem that you have. The momentum is a strong factor in this. I would argue that Motley Fool just is kind of throwing spaghetti against a wall. That's it. Now, monkeypox. You guys may hear it's now termed Mpox because you'll get canceled if you call it monkeypox, I guess. I don't know if that's politically correct. I have no idea. But it's called monkeypox. That's the way I learned about it. It's Mpox. Their stocks are popping. Their stocks are popping, but they're pulling back today. So again, it's hype. It's hype. You will see this. We saw this during COVID. If you traded Moderna, if you traded Pfizer, if you traded Novavax, if you traded AstraZeneca, any of those drugs during COVID, it gets hyped up. I'm not a pharma guy. I don't like pharma stocks. I don't like healthcare stocks because this is what happens. They get hyped up and you don't know when to get out. But if you want one that's super volatile, MAXN, this one's up 6.82%. Wait till you see this stock chart. You want to talk about a falling knife. My friend's dad went into this one. I don't know why. Thought it was going to be the next great solar stock. That's what he heard. But again, valuation makes no sense whatsoever. It is probably worth zero. But this one, that the solar sees Q4 construction on massive New Mexico plant. After plummeting all-time lows of 12 cents. Maxen officials told the Albuquerque Journal they are hoping for a construction start at its Mesa de Sol project in New Mexico during Q4. The actual, the actual valuation of this makes no sense whatsoever. It's a strong sell in the quant. The valuation, they're not making money. Momentum F, profitability D minus. Their gross profit margin, 3.55%. Their growth, they're not doing bad. Operating cash flow up 140% because they basically just get a bunch of share. They issue a bunch more shares and they devalue shareholders. But if you want to trade this one, again, you can look at trading it on a 5-minute time frame. And if you want to find an entry, I've got an algorithm for that too. 53% over the last 2 days. You haven't wanted to trade it. But when it was down here and it started soaring, you wanted to get in. So if you want something to trade, those are the type of stocks that you want to trade. Not the type of stocks that you want to buy and hold. Now, a great list of stocks that you actually want to buy or sell. By sector, Oppenheimer puts it in. Marathon Petroleum. EQT, sell EQT. In XLB, by CRH, sell Celanese, CE. XLY, buy Ferrari, race. I've heard a bunch of stuff about Ferrari. Sell LKQ, which is, in consumer staples, buy Keurig Dr. Pepper. Sell Monster Beverage. In healthcare, buy Regeneron and sell Cooper. In financials, buy Blackstone, sell Franklin Resources. In real estate, buy Welltower. Again, it goes by sector. By sector. I like this. I like this a lot. In communication services, they say buy Meta, sell Take-Two. In utilities, buy Constellation, sell Exelon. So that's a great, great article, and it's a great list of stocks to look at it. PANW, let's pull up PANW. I didn't put the link in, but I'll put it in the newsletter. We'll just go to PANW and we'll take a look at this. They killed on earnings. Platformization, I can't say that very well. Strategy highlights risk rise of cyber attacks. Again, if you don't have a cybersecurity stock in your portfolio, get one. And which one do you want to pick? That was a question on in YouTube Live. Just go to peers. Go to peers and list of Fortinet, Zscaler, CrowdStrike, Qualysys, Rapid7. It'll list them all. I own PANW. I own CrowdStrike. My dad owns Fortinet. Zscaler is one that I may want to get into. I just haven't. You can go down here. Again, this is the benefit of having Seeking Alpha. You can go and look at the valuation. PANW, most expensive based on PE. Zscaler's at 65, PANW's at 54, and they just killed it on earnings. CrowdStrike, still high at 68, still high. They've got their earnings coming up next week. We all know about CrowdStrike bringing everything down. Now, Palo Alto Networks on the 4-hour algorithm, it had you in. It's had you in for a little while, 315. That is a phenomenal gain. You got a big candle here. Big candle, 5.14%. On today's upside. The MACD, not super stretched. The RSI it's at 73. Is it pulling back? Probably. Now you got this gap up here at 363. It's trading at 365. It covered the gap. It covered the gap. Again, gap covers happen, especially when you go down like this for no reason. Back in February, when this dropped from 362 down to 277, obviously, I said it was a buy opportunity. Did I buy it? No. I may have. I forget. But I don't think I did. I'm way up on this one. I think I looked at it before on YouTube Live. Go back there and look at it. I think my average purchase price is between 150 and 170, somewhere in that neighborhood. I'm holding long. Yes, I want more CrowdStrike. I've sold other stocks and I've added CrowdStrike, but this is the bread and butter. This is the one I like. And there's no real reason. I mean, I just like this name, and I'm going to be exposed to cybersecurity. Now, has it run too much? I don't think so. Based on their earnings last night, the valuation is a D. The PE, super high, but you're paying for the growth. The PEG going forward is 2.65. It's a little bit high. I may want to trim it. When I go to Wall Street and look at what their price target is, you're going to see new price targets at 366. So you're right there. Probably makes sense to trim it. It's in my retirement account. Probably makes sense to trim it today. I'll make that decision. But again, I like this name. I want to hold it. I don't want to get rid of it. It's one that I just want. I saw another Instagram post from Personal Finance Hub. This guy he's a great kind of fire. And it's a text between him and a young person. And a young person says, "Hey, how do I get to be a millionaire?" And his response is, "Spend less than you make and invest the difference." And the person responds, "Oh," and the guy says, "I never said it was sexy." Let this be a lesson, okay? Investing in stocks is not going to make you 100% wealthy overnight. There's no get rich quick scheme. That is why I had a fire podcast, but again, there's only so much you can talk about on a financial independence retire early podcast. It's about spending less than you make and investing the difference. Now you do want, I do think you want to invest in single stocks, not all of it. You want your ETFs. You want to expose yourself to different sectors, But you do want to pick and choose which stocks you do. My personal choice was tech stock, big cap tech. I didn't care that biopharma could make you 1,000% in one day. I didn't care. I wanted big cap tech. Yeah, you could get 10% a year. Yeah, you could get 50% another year. I thought it's interesting because, again, a lot of people look at me as, hey, he retired early. He did something right. He just had an average job. Yeah, I'm an average Joe. I figured stuff out. I don't want to make things complicated. It's about spending less than you make and then investing that money that you have over. I don't care if you're 15 and you got a lawn job and you make $5,000 this summer. Spend, 500 of that. Invest 4,500 of it. I was talking to my friend's son last night. We were trying to set up an Xbox kind of game so that I can text my new Xbox on playing with him. And we were talking, and I said, 15-year-old Gary was like, God, what would it be like to play, just sit inside and play video games all day? That was my day on Saturday. And the reason is because that summer that I made $5,000, I spent $500 and invested the $4,500. So teach that to your kids. And again, I want to point that out. Now, on that sense, and also I've gotten a photo of index ETFs from Vanguard, Spider, and iShares. Okay, there's 3 different ones. There's total market, there's S&P 500, there's international stocks, and then there's world stocks. Okay, to that I am a high net worth individual. I am in a group with high net worth individuals. This means that they have to have $3 million or more. Okay, the majority of them have well over $3 million. It's a very exclusive group. I'd say 70% of that group is way more comfortable in being in 3 to 6 ETF positions in their portfolio rather than owning even one single stock. Okay? Rather than owning one single stock, they own 3 to 6 ETFs. And that's 70% of those people who have a net worth of over $3 million. Now, Ramit Sethi, who is on Netflix and the author of I Will Teach You Rich, he's in that group with me. And we debate this all the time. And he doesn't like my single stock strategy. I don't like his renting strategy. I like to, buy my house and live in my house. He likes to rent wherever he goes. He says it's much better for him because he's able to invest the money that he would have spent on a house, and it actually provides him income. There are different paths to different outcomes, okay? Nobody's got the path for you other than yourself. And so that's what I want to point out. Between those two things, you've got to find your comfort level. Now, Trendspider's my tool. I feel very comfortable with Trendspider and my 4-hour algorithm. If you do, you can absolutely sign up for Trendspider with that. If you want to just stick to the fundamentals, you can sign up for Seeking Alpha, $25 off your premium membership and a free 7-day trial. If you just want stuff, handpicked for you, and you don't want to just buy VOO or QQQ, buy Seeking Alpha's Alpha Picks. Look at that stock portfolio performance. So again, there's different ways to do this, different tools that you do. So Dex from Spotfiy asked me my thoughts on Merck. Again, I will point this out. Asking me my thoughts on Merck is like going to McDonald's and saying, what are your thoughts about the Whopper? I am a big cap tech guy. Now, what do I think of Merck? I think it's a drug company. I don't know enough about it to say, oh my God, it's got huge upside. I'm not Stephanie Link. I'm not one of these people who actually researches stocks. But Merck, the algorithm makes you 18%. Buying and holding makes you 28%. That tells me that we're in an upward trend. And this 113 after this earnings would worry me. Now, when you look at the fundamentals of Merck, let's go and look at the fundamentals to see what the quant says about this. And again, this is Seeking Alpha. Quant says it's a hold. Valuation's a C. Growth A. Profitability. Momentum is a strong force in this market. It has not done well. Okay? That's a strong force. When you look at the revisions, that may be why it's down. 19 down on earnings per share, 9 down on revenues. That may be why you're getting killed. So my thoughts on Merck, trade it. I wouldn't own it, but again, I'm just I'm McDonald's and you're asking me about a Whopper. Noah from Spotfiy asked me about OKE. What is OKE? One Oak. I don't even know. Is this a REIT? I think this is a REIT for some reason. Stock chart looks okay. I mean, it looks really good, to be honest with you. Algorithm makes you 10%. Buying and holding makes you 36%. Algorithm got you in at 84. OKE, I don't know what they do. Let's see, just look at One Oak. This is a stock. We can go to the summary. It's an energy stock. Energy. I mean, my energy pick is MPLX, Exxon. I don't know enough about energy. But this one, the valuation's a D. It's a $51 billion market cap. Nothing crazy good about it. I mean, the valuation and the growth. But just like any other energy company, profitability is a B. It's not bad. When you look at this one, we're in an upward trajectory on this one. Is it soaring? No. You look at your pre-pandemic in February, it's an $87 stock. You're going back to that. I mean, that's where you're going. So, Noah, I think it's fine. Nick from Spotfiy. Can you please look at ASTS Space Mobile and give me your thoughts on the company? I was told by my buddy to buy it a couple of weeks ago, and I was skeptical because it already had a massive spike. My buddy bought a bucket on January 8th at $11.60, and it closed today at $38. I added, I will look at it tomorrow, but don't expect me to give you any advice on buying it. I'm sure I'll say trade it. Remember, I'm 54 years old. I've got my portfolio significantly invested in the Mag 7 trade. I've got a certain risk tolerance and timeline that may not fit this, so be sure to take my advice as just another douche on the internet. Let's go and look at ASTS. The one thing I do know about ASTS is it's been getting a huge spike, and the reason is because I think it's AT&T is going to use them as their texting service for space stuff. That's all I know. And yeah, if your buddy was in at July 11th, I don't know if he bought, let's see, my buddy bought it July 8th at $11.60. July 8th. Let's look at July 8th. July 8th, it was about 11. Yep. July 8th, it looks like the low. I don't know if he bought it at $11.60 because the low on July 8th was $11.92, but it's in that price range. It's strong. Now, do you want to trade down the 4-hour algorithm? The 4-hour algorithm makes you 1,316% versus 219% just buy and hold. The reason is because it got you in here at $2.60. There's no other reason. I would never trade this on the 4-hour. And the reason is, look at the weekly. That's a dying stock until you got some type of news in May of this year that something was up. There was some insider stuff going on. This is it. This is insider stuff. That's it. And so is it extended? Absolutely. Nick, I don't know what to tell you. I mean, the valuation on this is nothing compared to what their contracts could be. But you're basically putting this on future growth. Okay? It's not making money. Today, this is a hugely capital-intensive business. They're going to spend more than they've got. We can go to FinViz, and this is a great way for you to look at this for free, okay? They've got $1.90 per share. They are losing $145 million, okay? They have $1.90 per share. What's 151 million times 1.9?
The answer is 286,900,000.
Okay. So you've got 2 years of runway when they just got a contract, and most likely they have to spend more money than they've actually been losing to put those satellites in orbit. That is the problem that you have. You will absolutely, it's got a 20% short interest. You're seeing some short float on that one as well. I don't like this one. I don't like it, but you can trade it. You can trade it all you want. Now, Mike from Substack. Hi, Gary, longtime listener, reader, first-time caller. We're loving your work and insights down under. I thought it was Australia. It's New Zealand. He corrected me. My apologies. I am not a geography expert, and if I offend you, again, monkeys are already canceling me. I've just read it on the internet. Monkeys are just upset, and they're canceling me because I called it monkeypox. I've been dollar costing averaging into large cap tech stocks, putting large amounts as my conviction grows. But with the recent downturn last week, I found my portfolio is down. I'm now needing these stocks to hit all-time high for me to break even. I'm starting to get nervous as bad news appears to world ending, whereas good news is just good news. Any insight from the OG Mad Dog? Stock picks is appreciated. Send our regards to Penny. Penny rolled in mud. What did I respond? I said, I'll add it to tomorrow, but I'm not sure if you're dollar cost averaging into names, how you could be negative. The averages are up for the year. So unless you just started recently, like in July, okay, dollar cost averaging, you've been doing it too quickly then, because for long term you want to expand that out. But again, if I will talk about it, I'm a huge fan of Australia, and that's where I went in there, blah blah blah. But again, if you're dollar cost averaging, let's just take a look at the Qs, because what I want to show you is I'm not sure where you're going negative, because if we look at a weekly on this and we look at this year, the only time you could have gone negative is if you went big in July. That's it. If you went big in July, then that's your negative. Now, if you were big here, semi big in March, and then you went big in July again, and you only did those two, you might be negative. But where's the trajectory going? And do I know where it's going? I mean, Mike, I don't know where it's going. But if we just let's look back, let's go to a monthly. And let's look at 5 years from now, 5 years before. We can go back. Let's see, it's 2024. Let's go back to 2014, because that's 10 years ago. Okay, 10 years ago, this time 10 years. We'll go to August 2014. The high was 99.91. It's 4 times. 4 times your money over 10 years. Were there pullbacks? Absolutely. Should you have been nervous? Maybe. So again, everybody has different risk tolerances. Where do you want to be? Where do you want to go? If you're in these big cap tech stocks and that's where you want to go, then pick your winners. If you've got losers and they are losers long term, I wouldn't consider Microsoft. Microsoft pulled back from 440 to 420, or it went to 400. Here at 462 back in July. If you were adding in on this one, and all of a sudden you're doing you're at all-time highs. The way you dollar cost average is not at all-time highs. The way you dollar cost average is, as you're starting to go up, you add a little bit. You add a little bit, and you wait for pullback to add more. So during this time, say you had $100 to put in. Put in a dollar, a dollar a day. Put in $1 a day here while you're going up. Now, as you're going down, switch that to $5 a day. Switch that to $5 a day. That's how you take advantage of those pullbacks in stocks that you believe in. So dollar cost averaging, there are strategies around it. You can Google it. You can find it out. But that would be my guidance. Unless you started dollar cost averaging here in July, I can't imagine that you're down. Again, that's a little bit nuts. But hey, you do you. I think long term we're fine. McKesson. We're talking about scans now. McKesson is one. This is in our watch list. This is one that got beaten down on earnings. Got a gap above here. Do your due diligence. I think this is a good one. I think we get back to that 614 without knowing exactly what went on. We talked about POWL with Jim Cramer going over it last night, how it's an alpha pick. This is one that just got an entry into the algorithm. Again, 136 is the entry here, but we got another cross up on the entry, and it's going for a move higher. That's what it tells me. Verizon, we had a cross up on KHC, CXX, NEE, DHR, Pfizer. Pfizer is one. Pfizer is an interesting one, because if we're talking about monkeypox and stuff, maybe they start buying a monkeypox vaccine. 2882. This one is a long-term, loser. Right now, your 50-day is still negative. Getting back up there to the 200-day, you got 40. You got a long way up to that 200-day. I'd rather see you buy at 30 when it's got confirmation on that 50-day than to see you buy at 30 when it didn't have confirmation and it pulled back to 27. That's what I'm talking about. Spider sector got an entry on the algorithm. XLU. Now, if we go over here to Seeking Alpha and we look at the market data, XLU, if we just look at XLU for the year, yesterday it was down. Today it's down 0.24. 1 month it's up 6.84%. It is your leading sector over 1 month. Year to date, it's up 18%. It's your second leading index sector. Okay, 1 year, it's up 18%. It's not even close over 1 year. But year to date, it was so far down, it was due for a bounce. Now, you got in here at 68. It's got another leg up here. That's all it's telling you. That's all the algorithm's telling you on the scan is it's got another leg up. We talked about this channel. We talked about this channel being the trend here all the way back to like 2014, somewhere in that neighborhood. We talked about that channel. We talked about how it's in this lowered part and how it's going to bounce back up. So hopefully you were adding back in here to your utilities at 64 and stuff because you still have confirmation. You still have somewhere in the neighborhood of, 78, 79 until you get to the top there. That's where you're trading at the top. So if you have any questions, hit me up. The way you sign up for Trendspider is you go over here, sign up for Trendspider, then you email me. My email address is in the upper right. You want Seeking Alpha, you don't need to email me. Just sign up for it. You save $7. Get the free 7-day trial. At least try that. Alpha Picks, it is you don't get 7-day trial on that one. It is a fantastic, fantastic portfolio. And at the very least, sign up for Webull. Sign up for Webull. Just throw some money in there. I've got, let's see, $7,400. I will tell you, out of the 7,400, 3,000 of that is NVIDIA. 3,000 of that is NVIDIA. Now, I'm crazy. I've got Apple, I've got Google, I've got NVIDIA. I got given some Ford that I haven't. And my second biggest is iBit. That's $2,000. Okay. So 3,000 and 2,000, that's $5,000. 5,000 of that is in two stocks. It's a crazy, just, hey, I'm going to YOLO this portfolio. Now, it doesn't make sense to do that with money that you're not willing to lose. This is my sports betting app, and that's why I like Webull. And I love Webull more than I love Robinhood. And the reason is because they don't limit me. They don't have 24-hour trading. I'm not doing 24-hour trade. I am no way I am equipped enough to do 24-hour trading. But Webull, it is a fantastic app. My two bets are NVIDIA and iBit right now. And that's it. And I've done really well. NVIDIA, I'm up 30%. iBit, I am actually down 5% on iBit. I'm down 5% on iBit. So the majority of my gain, Apple, I'm up 34% on. Let's see, Spotfiy, which is one that I have a very small position, $300. I'm up 17% on. So, Snapchat. Why I bought that one, I don't know, but I'm down 13% on that one. But yeah. So I've got that kind of going for me on Webull. So if you want Webull, get that. And at the very least, you should sign up for the newsletter because it's free. Okay. That's it for today. Take care. See you. Bye. Hopefully that looked good. I don't know. Let me look at the I got out of AMD, Alexander. I made a mistake. I got out of AMD. But I have AMD and QQQ and other ETFs. So I'm exposed to it, but I just don't own it outright. I actually got out of it. And the reason I got out of it was I was dollar cost averaging. I went over it in the newsletter, but I was dollar cost averaging. And that one had quite a gain. A huge gain, in fact, because I was buying back here in January of this year. And I think it was around, it was October, November. It was October, somewhere in that. When it dipped under 100, I added a big position. Then at 110, I think Joe and I added a bunch. And then at 120, I added a bunch more. And I wrote it up here to the 227. And that was March. And then I got upset that I held it all there. And it made it all the way back to 170, 187, it looks like, here in July. And I still held it and it dipped down here to 140. And I was like, screw this. I'm going to get rid of it. It's a long-term hold. I should say it was a short-term hold. And I had some short-term write-offs against it. So I sold out of that one because I had Ulta. I had, what other ones? GCT. I had some other ones that I had some smaller write-offs for. So I'm out of AMD. I plan to get back in, but it's not horrible. Yeah, Chris is better at Rocket Lab than I am. I don't follow it. Nanonuclear energy. This one is one that I brought up about a month ago. And it's on the watch list, I think. So here it is in the 4 hour. Got you in at $8.10. I mean, this one made 122%. NNE is just, I mean, it's not making money. It's just got a name that retail loves to trade. And you know, Wall Street covers it. One person, $39 price target. It's not making money. That's the problem with it, is that, you know, the valuation is crazy. NNE is probably better. Because we can look, book value is 45 cents and it's trading at 13.19. Short interest, not crazy short interest. Nobody's buying it individually, but again, it's one person that covers this. Market cap of 397 million. Trade it on the 65 minute. I mean, this one, let's see. 65 minute probably makes sense. Let's look at it. 363% versus 193%. Look at this nice, perfect buy. Okay, at $8.22. Now, if you buy it today, I think your top is 15. But that's not a bad play. You know, just this morning candle is 6.24%. Your RSI is a little bit extended. Your MACD's still at the oscillator. So it's not crazy to think that you could, you know, here, I'll buy $100 of it. In Webull. Let's see. It's up 15. Let me look at the 5 minute. Let's see. Do we want to buy that? No, you don't want to buy this. No, I don't want to buy this. Look at those inside candles. I don't want to buy it on the inside candles at the upper end of the Bollinger Band. With the Bollinger Bands that wide. No. But it's one that you trade. That's it. Yeah, it's short squeezes. That's all it is. Let me look at my portfolio. And I had a lot of setup issues. So hopefully this works out. Let's see. Yeah, I'm up 0.31. I think I've got a meet. 0.31 markets, you know, Qs are up 0.15. Tell you what my leading stock is probably PANW. Apple's making money, Google money. PANW's making money. Percentage-wise, it's my biggest one. But Apple and Google, dollar-wise, I'm losing on NVIDIA. It's down about. Losing on SMCI. Now I have Dell is down 1. Can't believe Dell. My average purchase price on Dell is $114. My average purchase price on Apple is $7. Okay. I'm out of here. See you guys tomorrow.